Markets practically stood still yesterday. Dow Jones closed unchanged, Nasdaq rose 0.07%, S&P 500 lost 0.19% to close at 3,906.71. Most likely, many are looking at cheaper companies and picking them up for the next week. And which companies to choose now is interesting, you will learn in this review. Rising inflationary expectations, which are seen in the growth of US bond yields, put pressure on the market. And the emerging specifics on the aid package, the 26.02 vote and the Fed's rhetoric that the current monetary policy will continue until the inflation and unemployment targets are achieved, are supported by the market. As a result, he is still standing still. I think that the denouement will be next week. The difficulty of the situation is that inflation targets will be achieved quickly, but employment targets are unlikely. The increase in minimum wages and tax increases, which Biden announced, do not contribute to the growth of employment, because many companies in such conditions will either withdraw production from the United States at all, or not increase their staff unless absolutely necessary. An increase in social benefits contributes to higher consumption and inflation, but employment growth will not increase, since many, especially from the marginal minorities so beloved by Biden, will be quite satisfied with the benefits they receive, and will not look for work. Therefore, a situation of growing inflation with a reduction in production and employment is possible. That is, stagflation is when the economy falls, production and business activity decline, and prices rise. To combat inflation, it is necessary to raise the rate and slow down the infusion of new money. To stimulate production and employment, the rate should be kept low and the current monetary policy should be continued. As you can imagine, it is impossible to do this at the same time. How the Fed will get out of this situation and what it will sacrifice, we will see during 2021-2022. Let us examine the topic of stagflation separately. How to make money on this? Stocks are a risky topic, but I would pick tech giants. In particular, Apple below 130 will readily top up below. More safe and in the medium term, lithium, cobalt, uranium. Gold and especially silver, buy and hold. I think we will see 2000 for gold and a range between 40 and 50 for silver in 2021. The asset of the year is Bitcoin. When I first told about him on this channel, the asset was worth about 19k, now it costs over 55k, a little more than 2 months have passed. S&P 500 Index. As you can see from the index yesterday during the falling markets, there were also a lot of buyouts. But which companies from this index can you buy well? Nvidia shares. There were successful investment ideas for this action. I'm glad if someone was able to use them. Now there was a slight correction to the dynamic support levels which formed two exponential averages. The prospects for the company are very excellent and this is evidenced by the already broken figure of technical analysis. I believe that the growth potential of this company has not yet been exhausted. I would consider them primarily for long-term investments, as well as practically the entire technology sector from the group of large corporations. What else can you suggest to buy? Walmart shares. But I would have looked even more closely at Walmart shares. I'm glad they asked a few questions about this company, because it has the same situation as Apple. The company performed well with good earnings and its shares fell 6%. The question is, where is the logic here? And I answer that it is not here. The markets are completely insane and inappropriate behavior. As it was said on the channel, and indeed as you can see, a lot of inexperienced investors have come to the markets, and they ask all professionals to take their money. There is no other way to name it. Because of the nerves, the shares of good companies fall on good reporting, and this is just a reason to buy shares of good companies for a long time. I recommend buying Walmart also for a long-term purpose. Palantir shares. But I probably brought this company for dessert. Unfortunately, from the point of view of technical analysis, the company cannot be analyzed much, because it entered the IPO quite recently, but it should be noted that the company has fundamental potential despite the high volatility. Palantir is a company founded by the PayPal Mafia, and these guys, I assure you, are the backbone of all big tech. Of course, I do not recommend investing all my funds here, but I would allocate a percentage of my portfolio depending on the perception of risks. What are the chances of failure? Honestly, the only failure of the company is if state orders are not given to them. The company is closely associated with the CIA, which provides a number of advantages for the company's survival and profit. There are quite talented guys working there, and their chances of success are many times greater. Plus, their clients are investment banks and hedge funds. What do we end up with? The company has good founders and a board of directors. The company also has support from the US government, plus Wall Street support. The company will be able to show itself, and I would include them in my portfolio.